Okay, what is up, traders? What's up, tycoons? Super excited for today's video update on Spell token. SPELL is the ticker. Now, we got exactly what we were looking for. We are using the Fibonacci retracement levels as well as the relative strength index to help us figure out the price action and determine whether we should be making some entries or some exits. So we're going to go over how to use those, break down the current levels that we're seeing right now and some of the signals, whether they're exit or entry signals, and really just give you guys a good informative video on how to understand price action and some of the movements in the market. So make sure to smash the like button, subscribe to the channel, and we're going to jump straight into it, okay? So we have our three major retracement levels, the 61.8, the 50%, and the 38.2. These are the three most common and most well-respected. And you use these to identify trend continuation or trend reversal. So, nothing moves in a straight line up or in a straight line down. You get a move up, retracement, continuation higher, or a move down, retracement, continuation lower. That's your trend continuation. And these are the retracement levels. Now, if you break through these retracement levels, let's say you move up, retrace, consolidate, and then break through, you can spot a potential reversal, right? Same thing with the downwards move. If you retrace, consolidate, and break through, you can spot a potential upwards reversal. So it's no secret that throughout 2022, crypto was in a bear market. It was a brutal crypto winter, and we can see that we're respecting the downtrend continuation, right? We have a move down, we retrace up to our 38.2 retracement level, and then we continue that trend. And we do it again where we retrace up to the 61.8, and we continue that trend and head back lower. So what we were looking for, and some of the things that we look for potential entries, even in a bearish cycle, even in a crypto winter, one of them is going to be bullish divergence. So we'll go ahead and highlight that now. So take a look here. We have two circles, right? We have a low and then a lower low. All right. And if you look at your RSI, this is measuring the relative strength of a token at its given price. So it should be reflecting what the price of the token is doing, but that's not the case. In this case, where we have a low and then a lower low, we actually have a low and a higher low right over here. So we're seeing we're actually building relative strength now, increasing in relative strength as the token is going down in price. And what do? We get a nice rally. Ultimately, it gets rejected and stopped out at our major retracement level. So, if you are taking some long positions, this is a very important area where you want to be cautious, right? Where you may want to protect your trade and protect those profits because, there's a chance that if we reject those, we're going to continue our trend and head back downwards. Now, we've established our bullish divergence trend line here. Look at what we end up doing. We end up making a low, right? We made that lower low. We come over here, make a lower low and a lower low again. So we're going to see, is there any bullish divergence? Well, if we take a look, we're actually still bouncing off of the same exact initial bullish divergence trend line that caused the initial rally, right? So we have the trend line starting over here. We get our first bounce off the RSI here, and then we get another bounce off the RSI here. Now we know that we still have bullish divergence. We're clearly in a downtrend on the price of the token, but we've clearly been building relative strength on our RSI. Now, typically, the longer the divergence, all right, and the larger the divergence, the bigger the move, right? Now, there's no way to predict if the move is going to be a 5% move, a 20% move, or a 100% move, but it's just one of the indicators and something that traders look out for to spot potential entries, okay? Now, if you take a look here, we did get a very nice rally. So off the initial bullish divergence, we got a nice move as well, right? About 49%. Now, if we take a look here, all right, off this bullish divergence, we got a very nice rally, and we actually rallied up about 83%. Now, pay close attention to where we're at right now. If we look, we're at our major resistance levels. And remember, this is where I said you want to protect your trade. So we have our swing high up here down to the swing low. So we have this move down. All of this has been a healthy retracement to potentially continue the downtrend. Now, remember what I said. That doesn't mean we have to. You can spot a reversal. So if we, we're holding above the level right here, if we consolidate in here and we're able to break out and flip this 61.8 to support from resistance as we've been rejecting it, we could potentially get that reversal and break out higher. On a shorter term scale, we're already starting to see some higher highs and some higher lows. I highlighted those in my last video, and I'll go ahead and highlight the new ones as we've created some more here recently. So we had a high here, made a higher high. We had a low, we had a higher low. We have a higher low again right here, and we got another higher high. So on a shorter term basis, we are creating higher highs and higher lows, but on the larger scale, we're definitely still in a downtrend, and we really want to break the 61.8% resistance level. So that way we could potentially, continue this reversal on a larger scale. Now, the level specifically that we're battling as resistance is going to be 0.0009215. All right, that's our major level. Now take a look at the circles that I have up here. Okay, just like we had bullish divergence in these instances, we also can get bearish divergence. So if you take a look, we have a high right here, and then we have a higher high right here as well. Now let's look at our relative strength index. We have a high, we have a lower high, and we have a lower high at the points where we're creating higher highs on the price of this token. In this case, that would be a bearish divergence, meaning we're losing relative strength as the price of this token is increasing. Now that means that we could see some bearish activity, and we already had a significant drop, right? So this bearish divergence may have played out, or it may continue to play out. And if we come up and keep rejecting this level, we could be heading back down lower. Now, if you take a look from our initial bullish divergence trend line and our new bearish divergence trend line, we're forming a little bit of a triangle pattern here. So we're going to look and see, do we get a breakout to the upside that could coincide with us breaking past the 61.8% retracement level? Or are we going to come down and break through to the downside, and that could coincide with us getting a reversal back down to test some of our previous lows? Now, just as you use these for resistance, you also can use these for support. So that's exactly what we did in the last video, okay? We took our swing low up here to the swing high, and we said, hey, if we pull back, we need to hold above these three levels, all right, our major retracement levels, so that way we can continue that uptrend. And sure enough, we did. Okay, we bounced off of those support levels very, very nicely. So now what we're going to do is we're going to adjust these and drag it up here to our new highs. Okay, so now we have our new highs up here connected down to our swing low, and we're just going to draw this over a little bit and take a look how we're currently bouncing off of our 50% retracement level of this move. So, when you take the entire move from the low to the high, you see that we're still in healthy retracement territory, and we bounced off of our 50% retracement. So that level is going to be 0.0007174. And below there, we have our 61.8% retracement level at 0.0006680. We need to hold above these levels, because if we break them, again, that's when potentially we could see the reversal back down. These are our major retracement levels of support. Okay, and then we're battling our major retracement levels of resistance to the upside. So we're going to see which trend is going to be stronger. Is the initial downtrend that we're retracing right now, is that one going to overpower and push us lower and potentially break this bullish divergence trend line? Or is the shorter term uptrend where we're retracing right now going to overpower? And are we going to be able to break this bearish divergence trend line, retest that, and continue to head upwards? So that's everything that I'm looking at right now. If we break above this 61.8% retracement level, we do have some bullish price targets we can go over. I'll go ahead and pull those up for you guys real quick. And we are going to be looking at, let me add on our 786 real quick. We're going to be looking at, if we do get the reversal and break through our 61.8% resistance level, we're going to be looking at 0.0010434 as well as 0.0011330 as some potential bullish price targets to the upside. Now, something that someone commented, which I really enjoyed, and I hopefully I'll see some more comments like this, but let me know if you like this. What we're going to do is we're actually going to compare Bitcoin right now to Spell, all right? And we're going to start it off here at the beginning of 2023. So if you take a look, since 2023 has started, Spell has outperformed Bitcoin, all right? And if you take a look here, it's up 45%, all right, versus Bitcoin up about 28%. Now, this coincides with bullish market sentiment, okay? I've made several videos on this in the past, but what you're looking for is you want DeFi dominance to outperform Bitcoin, right? You want DeFi dominance to outperform Ethereum. Those are signs of a bullish cycle, okay? And whenever you see, Ethereum or Bitcoin outperforming the DeFi market, that's a sign of a bear market, of a bearish rally or a bearish trend. Okay, so if Spell, let's say, was only like basically you're going to see the DeFi market either outperform or underperform relative to Bitcoin. And that's going to help you understand whether you're in a bullish cycle or a bearish cycle. And once those things flip, it could be an indicator that things are about to change. Okay. I know that may seem a little bit complicated, but it's just some data, okay, that I've done a lot of research on, and you can go and back test it, right? If you look at, DeFi dominance and DeFi performance relative to Bitcoin and Ethereum, you'll see that in the bullish cycles and in all of the bull markets, the DeFi dominance is outperforming relative to, Bitcoin and Ethereum. Now, we can also come in here and slap on Ethereum and just compare it to Ethereum and see how Ethereum has been doing relative, to relative here as well to Spell. Okay, where did it go? So Ethereum, all right, is only up about 23%, while Spell is up 45%. So, at the moment, we still are looking like we could be in a bullish cycle. Now, if we come down and break our major levels of support, we may end up seeing Spell and start to underperform Ethereum and underperform Bitcoin. And if that happens, we could be heading into a bearish cycle. Okay, so that's going to be it for today's video. Just wanted to include that quick Bitcoin and ETH comparison, so that way you guys can kind of understand how things are going and kind of where some of the sentiment is, right? Remember, when DeFi related coins and DeFi dominance is outperforming Bitcoin and Ethereum, you tend to be in a bullish cycle. And whenever you start to see those underperform Bitcoin and Ethereum, then you tend to be in a bearish cycle. So it's no wonder that Spell has been outperforming since the new year, as it's related to the DeFi space. And we're going to see if that can continue and if we can potentially make that higher high that we're looking for up around here. Okay, so that's it. Smash the like button, subscribe to the channel if you guys are new, and I'm out.